Hi, I'm Stacey Hyde and I'm back for episode 97 of Better Financial Health in 15 Minutes or Less. And I'd like to revisit student loans again because they are coming back. People are going to have to make payments, but there is a new program that is offering great assistance for people who may be worried about how in the world they're going to find the funds to make these student loan payments. And it's called SAVE. Don't ask me what the acronym means for it, but it is replacing the income-based repayment plan. And essentially, it lowers the amount of your so-called discretionary income that is required to repay your loans. For example, a traditional repayment plan for someone I met with yesterday, based on the value of her outstanding student loans, was like $400 a month. Obviously not something she could afford. Kind of started a little panic. I think that was the reason that her mom asked if they could come in and see me. And so what we found out is electing the SAVE plan lowered her payment to $120 a month, which is much more affordable. Not something she's excited about, but she's like, I can figure that out. The other thing that's important right now that loans have started back, if you do work for a qualified not-for-profit employer, say a hospital system, a school district, something like that, you want to make sure that you fill out the public loan service forgiveness paperwork. Because even though payments were paused over the last couple of years, if you worked for a qualifying employer and you had loans that you should have been repaying were it not for the freeze, that's going to count toward your 10 years of payments that you have to make. So it's important to go ahead and do that. And the reason that I encourage people to do it up front is then if you have any trouble with your loans or your employer, it gives you time to pivot and figure it out. Because I've seen people work for a qualifying employer for 8 or 9 years and then leave because someone offers them a higher pay. Whereas if they just stayed and finished out their 10 years with that qualifying employer, they could have had $50,000, $80,000, $120,000 worth of loans forgiven. So it's important to understand where exactly you are in this and to make sure you stay with a qualifying employer if this applies to you. The other thing that's nice about the SAVE plan is if you make a payment and say your payment's $100 a month, but really that's not even paying all your interest, that interest that you don't pay doesn't get added to your principal balance. It just goes away as though you had paid the whole amount. So it allows people to kind of get ahead, and it also will allow you to have any loan balance forgiven at the end of 20 years. So it does give you more flexibility. There's also a caveat. If your original loan amount was $12,000 or less and you're in a SAVE program, your balance due will be forgiven after 10 years, not 20. And for each additional $1,000 that you had, it adds 1 year to your maximum repayment. So I think that there's a lot of good information out there. I will say the Student Financial Aid website is quite good, but be careful. There's a lot of spam calls going on right now, acting like they're trying to help you. Do not give your student aid ID to anyone, not your login information. You want to guard that just like you guard your Social Security number, because what they do, the way the website works, the way they figure out your payments under these things like the SAVE plan is you put your information in there and they access your tax return from the IRS. So it's important that you keep that information very confidential and only use it on networks that you know to be safe. So be careful using public Wi-Fi networks because somebody might be trying to pull your information. That is if you're not also behind some sort of employer provided VPN or shield to help keep your data safe. You want to be real careful if you're looking at that information in public places. But while these loans are requiring repayment now, if you are in a limited earning situation, you can take advantage of this SAVE program. Also, if you are married and you file married filing separately, it's only going to impact, your income is only going to impact your loans. So that can help you if you're in a situation where your spouse makes a lot more money, but they're not inclined to necessarily help you with your payments, and that your payments are going to be based on your income, and so that can help you as well. But there are some deductions and stuff like that that you lose if you file married filing separately, but I think it's worth looking at if the size of the payments are going to be problematic. A lot of information there. There are good resources online. Be wary of people calling you trying to help you. They're really just trying to steal your data. But good luck, and I think that these new programs do offer people a good way out of getting out of student loan debt. Thanks for tuning in. This has been another episode of Better Financial Health in 15 Minutes or Less.